Arindam Ghosh, CEO at BlackRidge Capital Advisors, as well joins in on the show. Arindam, hi, morning. What would you explain yesterday's market nervousness to? What's keeping the markets, or rather giving the markets those kind of jitters, which explains the kind of, FII inflow actually cooled down? We saw, just about $12 million yesterday?
Well, good morning. I think what we saw yesterday was clearly in anticipation of what announcement probably the Fed was expected to make overnight. And we've all seen now that Fed has actually started the process of conditioning the markets once again for the process of taper to start to work again. So clearly, whilst articulating its stand on maintaining a kind of a low interest rate regime for a longer period of time, in fact, the taper talks are again back on the table.
What's your sense, though? Do you think this was just a one-off wherein the FII activity really slowed down? Or do you think this is just the beginning of a trend and we could see FIIs actually reverse their flows?
Now, if you look at, the FII data over the last, couple of weeks, obviously, the trend has actually been on the downside. So clearly, as we get into December, we will get to see probably the FIs trying to lighten up their position. So one cannot rule out the possibility of some profit being taken off the table. But I think the point that we need to bear in mind is that given what has now come out from Fed, December therefore is not a zero probability as far as starting of the process of taper is concerned. The process of tapering, may happen in a non-disruptive and calibrated manner, but despite that, I think even if there is a symbolic reduction, the repercussions on emerging markets, can be quite significant. And in an environment where, whilst the liquidity tap will still remain open, but if the quantum of flows get reduced, domestic and local factors is what is really going to hold the center stage. An environment and against that kind of a backdrop, clearly, India and other emerging markets will definitely may actually see some volatility intensifying going forward in the next couple of quarters.
Arindam, do you think the inability of this market to stay above crucial technical levels is a concern? And somewhere, do you think we have a top in place for this year?
Well, Nikunj, our view is that the market has actually run up, very, very sharply from, 5,200 kind of levels to about 6,200 levels, and it's been a very, very sharp up move. So clearly, in an environment where liquidity probably is going to get reduced and is going to get tightened, we may definitely, get to see some sharp reversal of flows. The only difference, I think, from a fundamental perspective is that today probably the economy is much better prepared than what it was a couple of months back. So I think in an environment like this, in a completely liquidity-driven environment, technicals may not really, hold. I think one will have to look at an environment where the liquidity cycle is going to turn, and how, the domestic economies and including, the emerging markets, with their individual and local issues are all going to stack up. We must remember that, the other, joker in the pack would definitely be China with their announcement of some of the structural reforms that they have actually been articulating. So in a China-India trade, we may actually see some serious rebalancing happening, which may actually even lead to sharper, reversal and sell-offs as far as India is concerned.
Arindam, what is your take on Jubilant Foodworks and Just Dial? They're expensive stocks, good quality franchise, but is there merit in buying some of these expensive concept stocks?
Well, Nikunj, without getting into stock specifics, our view is that in an environment such as this, where volatility is going to be extremely high, you can adopt two kind of strategies. In a relative return kind of framework, Probably the best strategy would be to try and hug the benchmark with a little bit of overweight position on the defensives. I would say, of course, if you have an absolute return strategy, then volatility will give you enough opportunities to make markets. So, and I think going beyond that, we all know that the market is extremely polarized. So there are pockets of deep undervaluation, and there are pockets which are extremely expensive. So one needs to therefore strike a balance, between where one sees value, depending on the kind of time horizon and the investment strategy and objective which one is actually trying to execute, through its portfolio.
What's the big fear amongst the banking pack, and is it a rate hike that the market is working with, considering the bond yield spiked up well above the 9% mark yesterday and inflation continues to remain high?
Well, I think the banking pack has actually seen a fair amount of run up in the recent past. Of course, the divergence angle has been a little overplayed, but it depends on the kind of time period that you're looking at. If you're looking at 3-year plus, some of the selected PSU banks I think look extremely attractive. Of course, they have their, issues around the NPLs and stressed assets. Capitalization, factor keeps resurfacing, from time to time. Private sector banks, of course, have done actually much well. We've seen, most of the banks reporting extremely good set of numbers. But overall, we must remember that, the process of tightening or the rate hike is still not yet over. Inflation continues to remain extremely sticky, so we may actually see a couple of more rate hikes in the offing. We also need to bear in mind that, whilst the feeling is that the liquidity environment is going to stay benign, but even if there is a symbolic reduction in the process in taper, it can have wide ramifications in emerging markets. Last time the talks of taper started, we saw how the markets actually reacted. Now this time when the tapering process really starts, we may see far more direct impact on some of the emerging markets. So I think one therefore needs to kind of move away from some of the cyclicals. Of course, stick to quality cyclicals, but definitely stick to quality banks. But again, I think one needs to therefore kind of build up a little more of weight on the defensives. We must bear in mind that as we turn the corner and get into the new year, the noise of tapering is going to get even louder. And at that point in time, you'll again have the debt ceiling issue and all that resurfacing. We have elections around, so the timing as far as India is concerned may not be so favorable as we get into the new year. So I think one needs to be therefore a little defensive in their stance as far as the portfolio is concerned.
Arindam, the only thing which has been constant for our markets this year is fear. First, it was the issue of debt ceiling, then tapering, then rupee, and now liquidity and earnings. So do you think till that time there is pessimism in this market? It is the overall pessimism which will drive the markets up?
No, I think sentimentally, Nikunj, we are in a far better position. I think definitely the policymakers have maximized the opportunity of this extended period, that we got to fix the economy to the extent possible. So definitely we are better off. So I don't think there is any reason, to get, very fearful. Of course, one needs to stay cautious. Because global factors obviously are beyond our control, and we also have some domestic issues and factors which are going to play up as we get into the next couple of quarters. Interestingly, the corporate earnings have actually surprised us. The results have actually been much better than what was anticipated on a consensus basis. So I think corporate India has also been fixing and repairing the balance sheet. So overall, I think today we are in a better position. So there is no reason for us to get unduly worried about tapering. But we should be prudent and cautious to prepare ourselves and reconcile to the fact that tapering is going to start, and therefore in a period of new normalization which is going to happen as the liquidity cycle turns, how we are going to adjust and how we are going to adapt and devise our portfolio strategy.
Arindam, again, the sugar name spiked up pretty well yesterday, even though the news flow was disappointing. Does sugar now become a buy, given that they're so beaten down and all the news flow perhaps is in the price?
Well, these are, some of the, sectors which are always influenced by government policies, and therefore, it probably would, kind of, from a very short-term perspective, suit, traders more than, long-term investors. We really don't, track that sector so closely. And we normally try and stay away from some of the sectors which would have, which are kind of, at the mercy of government changes in government policies from time to time.
So, Arindam, if given an option to allocate fresh capital after a 15% run-up on the Nifty at the current juncture, given the kind of cues we are working with, where are you happy to allocate capital?
I think once again, in an environment of possible liquidity tightening, we would definitely see the dollar index moving up. It will again put a fair amount of pressure on the currency. So some of the export-led, I think companies will continue to do well. So, it will be the usual suspects of IT, pharma, and of course in the run-up to the election, some of the consumer names, particularly the rural consumption companies, are some of the companies that we definitely would like to look at in the short term. In the long term, I would again like to underline that there are a lot of these good quality cyclicals that I think one needs to start building the position around the fact that today a lot of macroeconomic indicators are looking much better than what it was. So CAD is under control. There is pickup in export momentum. Inflation, of course, continues to remain a big worry, and growth is actually going to be the big challenge, and slippages around fiscal. So in spite of, I think, the government's conviction around maintaining the red line, but next year can be a challenge. So I think overall, I think today we are in a better position, but it would be wise to kind of strike a balance. So I would say a fair amount of the weight would probably tilt more towards defensives in preparation for the tapering process to start sometime soon.